right, getting everything set up. So let's kick it off. You guys already know we got to hit that disclosure for Passive Income University, aka your boy Curtis G. So before we can talk about anything with the markets, you know we got to read this disclaimer. Big shout out to Project Limitless. I see you, my guy. All right, disclaimer/disclosure. Please note that the following is not legal advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, so now that we got the formalities out of the way, let's get it popping and take a look at what's going on in the market with the charts. I'm opening up TradingView right now. Thank you for everybody that's in here. Yo, thank you, Mocha Ray, for sending a rose. User 723. Yo, R. Fergus, thanks for joining. Raul Durazo. Dylan Flood, thanks for joining. Mark Tez, I see you. Thanks. Mr. 286, thanks for joining. David Disler, thank you for coming through. TY, thank you. I appreciate it. I appreciate y'all for the likes. I appreciate it. Thank you, everybody. Thank you. Mocha Ray, thanks for sending another rose. Bunny, thanks for joining. So we're going to take a look at the market. I know that Powell's supposed to be talking at any moment right now. So let's pull up what I called out. Let's just do like a little bit of a little recap before Powell starts. Give me just a second. All right, so y'all can see it. So here is QQQ on the daily chart. So yesterday, about a half an hour before the market closed, I called out that Apple and SPY and QQQ were looking really, really good for calls. Especially QQQ, even though SPY and QQQ move the same way, but that's what I called out. Yo, Suha, thanks for joining. Mr. T, thank you for coming through. I appreciate it. Appreciate y'all for the likes. But just doing a recap. So I called out yesterday, this is the daily chart for QQQ, and based off of this bullish hammer as well as this gap that we had to the upside, I was thinking that it was looking really good for some calls, especially because we had already dipped down into this support zone. So in my opinion, and based on what my eyes saw, it was looking very strong for calls. I hopped in some calls. I gave the heads up yesterday. I was able to make a few dollars this morning. We can head over to my Discord to show where I called it out in the trading chat room. So just to show y'all, okay, so this was the trade that I got into yesterday. Gave it a call out. Let me bring it over. So no worries, I made about 7.5%, 8%, a couple $100. Now I will say the market did gap down, but it quickly turned bullish this morning. So if anybody saw it, you saw how the market turned bullish really, really quick. I know that Powell should be talking pretty soon, so let's see if we can get some of that YouTube action. Let's see, I got my TradeZella there. Let's see if Powell is live with it. Let's see. All right. It's JPOW. There he is. Let's bring that up on CNBC. JPOW's about to talk, so let's see what he does to the market. If anybody has any questions, though, in the meantime, in between time, about my trade, about what I was looking for, back testing, anything like that, you know, I'm here to give value to the beginners. So if you're a beginner trader, especially if you're a beginning options trader, my live and my TikTok is all for you. I like to give value to those of us that are just starting out. So let's rock with it. Yo, Rutherford Dolores, thanks for the follow. I appreciate it. Alan Smith, I see you. Mike, thanks for the follow. Appreciate that. Yo, Franco, thanks for joining. So yeah, so I do have a Discord community. It's called Passive Income University.
20 years, 30 years.
All right, so it looks like Powell's about to start talking.
The sure hand through a global pandemic.
Let's see what they're talking about.
An incredibly dramatic fiscal expansion. A lot of asset market volatility.
Yo. Desi Moby, thank you for the follow.
In many years.
And Anakin is gone. Thank you for the follow. I appreciate it. Thank you for the follow, y'all. So I'm going to kind of keep this low until Powell actually starts talking. That way it's just not distracting. We'll see what Powell's talking about in a moment. But in the meantime, we can recap the trade. So here's the daily chart on QQQ. You can see pretty much the same thing on SPY yesterday. Let me change this back to the daily. But basically, I called out in my Discord community that Apple, QQQ, SPY, we're looking really prime and really good for some calls. This was the bullish hammer on how yesterday ended. As we can see that today it gapped down. So if you got in yesterday like I did, your options contracts looked a little gnarly right when the market first opened. But after a few minutes, we had this crazy pump up that just blew past yesterday's high. And so those calls worked out. So if you're new to options trading, if you have any questions, go ahead and drop them in the chat. Like I said, I got a Discord community, Passive Income University, and so we go over the trades. I usually give a heads up on certain things that I'm looking at, but I don't consider my community a signals community. I consider it basically a sharing ideas community, and we educate each other. So I usually try to give a heads up at what I'm looking at and not necessarily saying, hey, get in this trade or this is what I'm doing, because it's all about doing your own subjective charting and analysis. But it was cool. Chris Waters says ES was wild today. Let's take a look at ES as well. Futures. Shout out to Chris Waters for saying that, bringing that up. Let me kind of, where are the futures at? Let's see if we can get gnarly with this. Look at this crazy bump up out of nowhere. Just boom. So me, I am a conspiracy theorist. I'm wondering if they ran the market up just before Powell talks because he might say something gnarly. Project Limitless says best community for all sorts of traders to get together and thrive. Yes, a big shout out to Project Limitless. Thank you. So yeah, if you join Passive Income University today, you'll get the first 30 days free. And then it's just $10 a month. And we have all kind of things in there. I'm about to start back with the giveaways and the awards for the followers and members of PIU. So I appreciate the shout out to Project Limitless. He's a real good dude. If you don't know, I'm going to just say this right now. Project Limitless is probably the best person to ever call out earnings plays. Yo, Alan, thanks for the follow. I appreciate that, my guy. Chris Waters says, I went short just before the upshot. Oh my gosh, Chris, I feel your pain. I feel your pain. And it definitely, at any given moment, the market is poised to do a turnaround, go down to be bearish or go down to the downside. So I don't blame anybody who is going short or looking to take puts or whatever the case may be. It's just that we have to be very hesitant as to when they're going to do that on any side, really right now, because we are in this all-time high area. So, if you're looking at a chart and your analysis says puts or your analysis says calls, I can't even blame you because we are in all-time high territory. This is pretty much uncharted territory for all of us. And so don't feel too bad. At any moment, things could be pulled. Who knows what Powell's going to say, whatever the case may be. But Chris Waters was talking about, here is futures. And I'm wondering, Chris, what time was this? Was it right around here that you probably went short? And then it just blew up like crazy. Yo, thank y'all for the likes. Thank you, Project Limitless. Big shout out. All right, so we'll take a look again. If you're just now joining, this was the trade that I called out yesterday in the community, or at least an idea. I said that Apple, QQQ, and SPY were all looking very good for calls for today. This orange area that I have charted out on my daily chart is what my eye sees as a support and resistance area. I feel like there was a lot of support and resistance in here on the daily chart. We saw that yesterday. QQQ kind of broke past this support and resistance with this bullish hammer, and then we had this crazy gap down, but then it shot right up into the morning. So thank you guys for the follows. Thank you. But like I said, I'm all about giving value. So if you got any questions about other things that I looked at, please ask it. Now, here's one thing that you want to do, right? When you have a successful trade, when you have a trade that works out just the way that you wanted it to, you want to take a screenshot and notate all of the details about that trade, the volume. If you like MACD, if you like RSI, if you like any of that kind of stuff, you want to notate it, add those parameters, those characteristics to your backtesting log, and then look for that setup. Go back and backtest and look for that exact setup that has the same characteristics of your winning trade. That's one of the dopest things that helped me out, was taking a screenshot of a winning trade and then going back and getting all the details and all the characteristics about that trade and backtesting it. So that's one way you could do that. Appreciate the follow, Chris Waters. Thank you so much. Yo, Scott Bray, thanks for joining. I appreciate y'all. Let's see if Powell is talking yet. Oh, snap. Powell's talking, y'all. All right, here we go.
A substantial degree of independence in the conduct of monetary policy. Fed policymakers serve long terms that are not synchronized with election cycles. Our decisions are not subject to reversal by other parts of the government other than through legislation. This independence both enables and requires us to make our policy decisions without consideration of short-term political matters. Such independence for a federal agency is and should be rare. In the case of the Fed, independence is essential to our ability to serve the public. The record shows that independent central banks deliver better economic outcomes. We recognize that we need to continually earn this grant of independence, and we do so by carrying out our work with technical competence and objectivity in a transparent and accountable manner, and by sticking to our knitting. By technical competence, I mean that the Fed policymakers use the most up-to-date information and research to deepen our understanding of the ever-evolving economy and to reliably deliver on our assigned goals. We're supported by a highly capable staff. We also draw on the insights and experiences of a wide array of business, academic, community, and labor leaders.
What is it supposed to be like? He's just talking about the economic outlook. This isn't
by
even...
objective, I mean that our
The market is, like,
analysis
moving
is
very
free
flat
from
right
any
now.
personal or political bias in service to the public.
I'm like, I feel like he had just talked the other day. Yo, Utico, thanks for joining. So we're just kind of looking at the market and seeing, I got QQQ up on the right-hand side, but we're looking at what Powell's talking about.
Transparency and accountability are fundamental for any government agency in a democracy, but are especially important for one granted policy independence. The Fed is a special...
Is anybody in any trades right now?
Clearly,
Is anybody in any trades right now while Paul is talking?
we're always striving
He's about to say something wild. I feel it.
And it is a job that is never complete.
Let's see.
But we've come a long way. Before 1994, the FOMC did not even announce monetary policy decisions. Today, we announce those decisions and we explain the thinking behind them in our post-meeting statement and press conference. We publish...
Yeah, that's very smart, Chris. No trades. No trades right now. I'm not in any trades.
Of each FOMC.
Let's just wait and see what Powell's talking about. I probably won't even trade until tomorrow.
And the chair appears before Congress to present that report and to answer any and all questions that are on the minds of our oversight committee members. In 2020, we completed a year-long public review of our monetary policy framework, and late this year, we will begin just such another review. My colleagues and I explain our views on the economic outlook and monetary policy in speeches like this one and in visits to communities around the country as part of an extensive outreach in which we seek input from individuals and groups throughout society.
All right, let me turn them down for a second. Let's just read what this is talking about. It says, Federal Reserve Chairman Jerome Powell delivers keynote remarks on the U.S. economic outlook at Stanford Business School's inaugural Business, Government, and Society Forum on Wednesday. I think it might be pretty neutral. I don't think he's going to say anything crazy here.
Fed policymakers are often pressed to take a position on issues that are arguably relevant to the economy, but are not...
I don't think Powell's going to say anything crazy. All right, Project Limitless says he's in SPY and MCD puts. I know those MCD puts were looking pretty good.
Climate change is another current example. Policies to address climate change.
Yo, Jason, thanks for joining.
Elected officials and those agencies that they have charged with this responsibility, the Fed has received no such charge. We do, however, have a narrow role that relates to our responsibilities as a bank supervisor. The public will expect that the institutions that we regulate and supervise will understand and be able to manage the material risks that they face.
Market is still kind of flat since he started talking.
Include climate-related financial risks. We will remain alert to the risk that there will be pressure to expand.
Yeah, I think he's going to keep it pretty vanilla. I don't think he's going to say something too crazy right now at Stanford.
Policymakers. In short, doing our job well requires that we respect the limits of our mandate. Thank you. I'll stop there and look forward to our discussion. Thanks.
Okay, nothing crazy. Are you about to have a Q&A? Oh, snap.
Thank you very much, Chair Powell, for those remarks and for taking some time to be with us and talk to us today.
All right, so while Powell's talking, everybody, if you want to go over some ticker symbols, if you want to go over some trades, let me know.
I'm going to get right into it.
Project Limitless says this is when it gets fun.
To the audience for sending questions over. What I've done is I've tried to organize the conversation around two themes. One, we'll start by talking about the macroeconomy, and then you have been shared through a very tumultuous period over the last 5 years, and I want to talk about the leadership challenges around that. So let me just dive right into it. pick up on something you started talking about, which is inflation. 2 years ago, we had inflation readings close to 6-7%. We've come down to 3% last Friday. The PCE inflation index, the personal consumption expenditure inflation index, which is something the Fed often speaks about.
Inflation is down to 3%. Is that true?
We've had a conversation about this. There's so many factors that have been play in the economy over the last couple of years. I wonder if you can just spend some time talking to us about what.
All right, let's see. He's about to start talking. Let's check out the markets. Let's see what's going on.
Last 2 years.
Sure. So I think I'll start with where we think the inflation came from. So what is actually different this time, at the risk of making that statement, is that this inflation wasn't strictly just a question of demand overheating and the Fed coming in and having to suppress demand. That's been
if you guys got any tickers you want me to take a look at, go ahead and drop them in the chat while Powell's talking.
A shock.
We can do some trade recaps, some trade reviews.
This episode actually also involved, as everyone will recall, the collapse of the supply side in a lot of ways. So supply chains stopped working. There were shortages of critical things like semiconductors, which turned out you couldn't make cars. I think many of us might not have realized how many semiconductors go into a car. In addition, there was a major labor force shock. So we lost several million people out of the labor market. So we had a very severe labor shortage. So it was a supply side issue as well as overheated demand from the closing and then reopening of the economy at a time when rates were low and fiscal policy was very supportive of demand. So we had both of those things. And therefore, if those were the causes, what we needed to see was both the unwinding of the pandemic-related distortions to both the supply and demand in the economy, and also the effects of tight monetary policy. So today, what we think we're seeing as inflation has come down sharply over the last year is those two factors.
The market is still flat right now. The market is still flat.
They do work together.
Project Limitless at CMG. Yo, Dan Egbert, thanks for joining.
It gives the supply side.
Let's see what we got here in the Discord.
2023, of course, was a year.
There was supposed to be a new message.
Very significant.
All right, we got our dividend alert. So we got a bot in the Discord that lets us know about dividend dates. Like I said, y'all got to check out Passive Income University. Come join us. You get the first 30 days free.
Year or two that might play out in the inflation picture.
I should also mention inflation expectations, which in our framework and in the thinking of most monetary economists, people think that having the public expect inflation to return to 2% despite it moving up, that's a very important factor in bringing inflation back down. In a sense, if people believe that price setters and wage setters in the economy, if they believe that inflation will be 2%, then that'll actually happen. So as we look ahead, though, one question is how much more juice is there to come out of the supply side recovery? We got a very large increase in population last year, which may have helped with inflation. It certainly helped with output, and it increased the potential output. At the same time, the economy is growing 3.1% last year. Around that, we also had inflation coming down sharply. So there may be more supply side gains to be had. Surveys of businesses still show.
We got on the right-hand side of the screen, I got Chipotle CMG up. It's looking very, very bearish right now.
There's some more benefit there. We also think that monetary policy is tight. It's weighing on
Chipotle's looking very, very bearish
in the economy. So, for example, durable goods surveys of
Ishmael Sonic gotta go fast. Thank you for the like.
Because rates are high.
I think it puts before the earnings release.
The labor market rebalancing
on CMG.
You can look at demand in the labor market as well as supply, but you see demand reflected in lower job openings, a very small increase in unemployment, in wages moving back down toward more sustainable levels. So we think those two forces that I mentioned will be the ones we'll be looking for. And the thing we'll be
we got some ex-dividend dates
data
for tomorrow
as those affect the outlook. And the same thing.
We got JP Morgan Chase, American Express,
it suggests
Cisco.
that the labor market is continuing its progress, and it's made substantial progress to get back to a sustainable level of wage growth.
All right, I don't think the market is really moving. I think Powell's going to be very
can I just dig
diplomatic and neutral. Let's take a look at SPY.
An analogy that people drew a couple of years ago was to the high inflation.
Sorry, so SPY's not really moving either.
Where we had a high inflation period.
I don't think Powell's going to say anything too crazy.
Shifting expectations, and through the wage price mechanism, ended up leading to a sustained period of high inflation. In the current situation, I guess I have two questions. How concerned are you about maybe inflation getting stuck in the upper twos, around 3? Could that last mile be very hard because inflation expectations getting stuck? And then relatedly, are there things you're looking at to tell you to signal
when
to
is
you
earnings for
that is an issue
Chipotle?
or isn't an issue?
Right. So, as I mentioned, inflation expectations we think are an important part of driving actually inflation, and we want them to be at levels that are consistent with 2% inflation over time, not 3%, but 2%, not 2.5%. The good news is that that's where they are right now, and pretty much have been for some time. And we look at surveys of businesses, households, forecasters. We look at other kinds of measures of inflation expectations, model-based and things like that. We also look at market-based. The market is always buying and selling inflation protection, and you can get from that expectation of or assessment of what markets expect. And all of those are pretty consistently saying that the public does believe, and it's a good thing because it's true, that inflation will go back down to 2%. So that's very assuring, but that's partly because of the very strong action that we took, and also because of our ongoing commitment to actually return inflation to 2% over time. So, and that is our commitment, by the way. But over time, so I would say it would be a concern if inflation expectations were not to be consistent with the outcome that we seek. But the good news is they're not, and I think our commitment is understood and respected and believed by the public, and that's as it should be.
Let me flip to the other side of the equation. We've had employment, economic activity that remained quite strong. The unemployment rate it's remained below 4% for the last 2 years. And this is during a period in which you've took the funds rate from 0% to 5.3% in about as fast a rate hike.
Looks like the market's trying to push up a little bit.
We've seen in history. A year ago,
Monka Ray, thanks for the likes. Just kind of sitting back, seeing what JPOW is talking about.
Again, you made some remarks about this, but I wonder if you can just go a little bit more into this. Why hasn't this happened? Why have we achieved what looks like a soft landing, which is inflation coming down, unemployment remaining low? What are the factors that have played out? And then the related question, do we think this will continue to happen over the next year or two?
Yeah, so I guess I've always had the view and always said that because of the unusual origins of this inflation and its differences from other prior episodes, there was a path to getting inflation back down, restoring price stability, getting inflation back down sustainably to 2% without the kind of large job losses and increases in unemployment that have been typical of prior tightening cycles. And the reason, again, was that some part of this was independent of demand. If you have to get all of the inflation reduction gains from suppressing demand, the chances are that will involve that will weigh on unemployment and economic activity pretty significantly. But here we had the situation for against semiconductors. You couldn't buy a car at the very time when people wanted cars.
Yo, big shout out to Chris Aaron, thanks for joining. Appreciate it. We're just listening to JPOW talk right now.
The supply of cars.
Trying to see if he moves the market, if the market goes crazy.
So what happens is the prices went way up. That's how the market clears in our economy. So on the other side of that, though, without respect to demand, once the semiconductor supply comes back, you should come right back down that curve, and you could, in principle, get inflation down significantly without just ignoring demand for a second. Mm-hmm. So I always thought that was possible, and I would say something like that appears to be happening. Sorry. So then your question is, how did that happen? So more recently, 2000, we expected that to happen at the very beginning, and that's why we thought the inflation was transitory, meaning it would go away quickly without much effort from us. That turned out not to be the case. And we thought then that was in 2021. In 2022, we thought the supply side would recover more. It really didn't, and I certainly began to wonder whether that was going to happen. And then it really happened in 2023, right about the time we were almost ready to give up on supply side recovery.
Take a look at the market. Market is still
significant
kind of
increase in labor force participation, accompanied by a significant move up in
Market is still kind of, I don't want to say, it's still pretty much flat. That's what I would say. Market is flat. Let's look at this 5-minute chart.
When that happens, potential output is going up significantly. The economy's productive capacity. So
pretty flat
so
so
far. Situation where productive capacity is going up even
What's up,
more.
cousin? Just trying to learn a little something. Yeah, so right now we're just talking about JPOW. Whenever Jerome Powell, the Fed chair, talks, the market is very delicate, very sensitive. So if he says anything crazy, then we can see that easily reflected in the market. But he's at Stanford right now talking, and I don't think he's going to say anything that's going to shock the market. I think JPOW is going to be very, very vanilla and neutral with his speech today.
Demand, and we just don't know the answer to that. We're not going to prematurely assume that there's no more progress to be made on the supply side. Indeed, the evidence is that there probably is more gain to be had there.
You had mentioned immigration has been a big part of the last year or two in terms of the supply side. Can you just expand on that? Is that how important is that relative to supply chain? Where do you see that playing out in the next year or two?
So I need to start by saying that the Fed is not an immigration policymaker, and don't comment on those who do have that assignment or the policies that they make. It's really we're just calling the balls and strikes on the economy as we see them. And so from that standpoint, our economy has been short labor and probably still is. If you talk to, and we do talk to a lot of business people, it's still difficult to hire.
So I'm gonna bring JPOW down a little bit. I don't think he's gonna say anything crazy. I could be mistaken. He might say something wild that turns the market upside down. But I also think that everybody's gonna be kind of I don't want to say pins and needles or maybe eggshells, but the market is probably going to be flat today. I don't really see myself trading for the remainder of the day unless a setup glaringly obvious presents itself. But cousin Chris, if you're still on, I'm going to break down my trade. And this is for anybody who has questions or anybody that's new to options trading. I'm going to break down the trade that I did yesterday. So I gave the heads up in my Discord community, Passive Income University, on what I was looking at. So we're going to take a look at QQQ. And if you don't know, QQQ is the ETF that mainly follows the tech stocks, but QQQ does follow SPY. So if you look at SPY, they pretty much do the same thing as each other. So let me go back to the daily chart. Here is SPY on the daily chart for yesterday. Wait, let me go back here. All right, so this is the daily chart for SPY. And for those of us that are new, SPY is an ETF that pretty much represents the stock market, the US stock market. And you see these candlesticks right here for SPY. Now let's go over and look at QQQ. This is the one that follows the tech stocks. You see they pretty much look the same. So what I was looking at yesterday, we'll go back. Yesterday is this candle right here, where my mouse is circling around. This candle on QQQ was down in the support area, which is this orange area that I got on my chart. I identify this as support. And so support basically means that a particular stock or its ticker symbol is going to have trouble going below it because it's a support, like a support net, if you will. Now this candle right here ended as a bullish candle, a bullish hammer, and that's an indication that we probably will have some more upward momentum or bullish activity. So we got this level of support, what makes it hard for it to go below. Then we have this candle pattern of this bullish hammer, and I was indicating yesterday in the Discord in Passive Income University that Apple, SPY, and QQQ were looking really, really good for calls. I got in yesterday. The market actually gapped back down more so into the support area, but as we can see, the bulls took over, the buyers took over and pushed it way past yesterday's high. So that's the long and short of my analysis. I basically saw we were already in the support area. We ended yesterday with this bullish candle, and then we just blew past it in today with this candlestick that we're on right now. So I hope that makes sense, but I'm open to ask anybody any questions. Chris Water says, yes, thank you. I'm not too sure, but I appreciate the thank you, Chris. I forgot exactly what I asked to make you say that, but I definitely want to go over any questions, any thoughts, any indicators that I use, any questions that you guys have about my trading. The more I could break it down and give you all value, the better. I brought up JPOW because I wasn't too sure what he was going to be talking about. I didn't realize he was going to be at Stanford. I really don't think he's going to say anything crazy to shock the markets. I really don't. I think JPOW is going to keep it very vanilla with this Q&A, and that's that. But we'll see. Anything's possible. But yeah, so here's the chart that I was looking at yesterday for QQQ. Like I said, Project Limitless says, what are your thoughts on the gap in the 1 day for SPY 500 level? All right, let's go over to SPY. We're looking at the daily chart, and he said that there's a gap at the 500 level.
During a year in which monetary, the federal funds rate is at a quarter-century high.
So I think QQQ, everybody, if you're not QQQ, but Project Limitless. So Project Limitless is asking about this gap right here, which was created back on February 21st on SPY, pretty much in the market. So I'm going to do a rough little drawing because I'm looking through my phone with y'all. So we got this gap right here, and I like to mark my gaps with the rectangle area, but I'm going to change the color in just a moment. So we've got this gap that was formed. I'm going to change it to white. I always do my gaps in white. So Project Limitless is asking about this gap down here. Now my thoughts are that until we come down to about 503, I don't think there's any possibility of this gap being closed soon. We would at least need to come down to 505 for me to start being interested in it again, and then 503 for me to start looking for an actionable signal before I get in to take puts to close this gap. Chris Waters says, question, thoughts on trading options versus futures. All right, so I'm going to come back to what Project Limitless is asking about this gap. So let me just rehash that really quick. Like I said, we've got this gap that was formed back in February 21st. It created this gap up. Project Limitless is wondering when we're going to come back down and kind of close this gap. My thoughts are, we don't know when that's going to happen. We know that eventually gaps do need to be closed. But honestly, I wouldn't be looking for the market or SPY to close this gap until we get back to like this 505 section or 506, right around here. And then I would look for an actionable signal once we get down to about 503. Once we get to this 503 area, I will be looking for an actionable signal for SPY to go ahead and close this gap. But in the meantime, because we're so far up and away from it, it's not even in my radar right now. Unless like tomorrow we gap down way down here or something like that. But that's kind of what my thoughts are on this gap. Now to Chris Waters. Chris Waters, yo stars, thanks for joining. I appreciate you. Chris Waters says, thoughts on trading options versus futures. Here's my thoughts. I've only ever traded options and regular stocks. I've never traded futures. I've never traded commodities. I've never traded anything like that. I say, to the best of your ability, give each one a try, a good, honest try, and whatever makes the most sense to you right off the back, follow that. And that's essentially how I've developed my trading strategy. I've learned so many different things, or I've tried to expose myself to so many different things, from chart patterns to RSI to MACD to parabolic SAR to Fibonacci. And whenever something doesn't really make sense to me right off the back, I kind of just leave it alone. If something makes sense to me immediately, I put more effort and more energy into mastering it or diving into it. For example, one of the first things that made the most sense when I got into trading was the strat created by Rob Smith. That's what these numbers on my chart mean. The 3, the 2s, and the 1s. That's the trading strategy developed by Rob Smith. That was one of the first things that like made sense in my mind. So I poured more effort into learning that and using that to help me develop a strategy.
Maybe I can just follow up.
All right. Project Limitless says the market is dumping. Let's take a look.
Or a data point that you're paying particular attention to the next
We got this 30-minute chart. We got a strong little bearish candle that's starting to form.
You knew.
I don't know exactly what Powell said.
One question about the next 12 months.
But this is let's see if we come. It looks like we might come down to yesterday's high. Let's see. What's Powell saying? What is Powell talking about?
Sorry, there isn't any. There's no one thing. It really is. We have a dual mandate. You're asking me to be single-minded about the dual mandate.
No, just a kind of a data point that you think is will guide you.
Can't do that. No, I mean we have to. I would say this. In our framework, the two goals, price stability and maximum employment, are equal under the law. But our framework literally says that if you're very far from achieving one of the goals and the other one is pretty much at goal or even better than goal, then you focus on the one that's far from goal. This is obvious, right? So, and that's what we did after inflation came up in March of 21, and then we really had a very tight focus. And you heard us talking about getting inflation under control. But as inflation has come down, the two things are moving back into balance. And we're not a single mandate bank. The key thing I'll end with, though, is price stability is.
I wish they had a live chat going on the
ability
YouTube.
to achieve both goals. If we don't have price stability, then we're not going to have these long.
Chris Waters says, "I feel the ES futures behave like stocks. Greeks to fight against." No Greeks to fight against. You're exactly right. That's one of the biggest pain points for me with options trading, dealing with the Greeks and the contracts. I feel like they're so manipulated. The Greeks, all that kind of stuff. I feel like they're so manipulated, and there's times where your contract should be moving and they're not moving, and there's times where you're not expecting them to move, and then all of a sudden they're moving all over the place. So, and I have been hearing that a lot lately in the trading community and FinTwit on Twitter or X. There are a lot more people that have moved away from options and they're going over to futures, and it appears that people are making money over in futures, so I'm not knocking it at all. My exposure was first to options. I jumped into it head first, and so this is just kind of my lane where I'm swimming around. Hopefully eventually one day when I feel like I've mastered options, I'll venture over to futures or commodities trading or something like that, but I don't consider myself to be a master yet, so I want to master this lane before I dip over to the other side.
That's where your own forecast.
But I do agree with you, Chris Waters, about there's no Greeks to fight against. I've heard that plenty of times.
Why do you think that is? Why?
Project Limitless, Fed's Jerome Powell, don't think inflation is reversing higher, would be quite disruptive. I stay away from commodities. I feel you. I'm not too sure, Project Limitless, did he just say that? My bad. Let's go back. Let's take a look at what the market is doing. It's pushing back up.
Start by saying that sort of every bit of the economy.
Yeah, we might see a little bit of fluctuation, of course, because people are going to read into what he's saying, but I don't think he's going to say anything that's going to have a market structure shift, right?
Longer term growth.
I don't think we're going to all of a sudden have a crazy, overly bearish day. And I also don't think at this run up that we're at now, I don't think he's going to say anything that's going to send a spy to the moon.
Output per hour.
Unless he's like, inflation is zero, we're cutting checks.
People lowered their longer run growth expectations to around, 1.8% as the median, something below 2%. That's given what had been our very low population growth, and expectations of productivity might be 1.5%, 1.5% kind of thing, productivity growth in output per hour. That's a pretty good place to be. We've had higher productivity than that recently. And the question is it going to be a sustained thing? Are we going to enter into a new period of higher productivity? That would be
for sure. Yeah, I appreciate you asking the question, Chris. Thank you very much.
All boats, generation upon generation. And, so people argue AI can be that effect. Some people are arguing that, there were a lot of business starts at the beginning of the pandemic and during the pandemic.
Project Limitless, what does he mean by would be quite disruptive?
And also that
I didn't hear him, so I wish I could answer more thoughtfully. But based on what you put on his quote, I don't think inflation is reversing higher would be quite disruptive. I think he's saying, if I'm reading what you put correctly, I think he's saying if inflation continues to get worse and worse, it's going to disrupt a lot of things with the economy, right? Recession, the thing that the Fed has been hesitant and is doing everything in their power not to say has happened. I think he's saying that if we legitimately recognize and acknowledge and put on paper or formally say that inflation is getting worse, then the market, and not just the stock market, but the entire U.S. economy is going to act that way, that is getting worse, and then that's going to be disruptive. Because he said at the beginning of this interview or this Q&A that if people believe that things are going to be at 2%, then they'll make it happen. It'll manifest itself. If people believe that things are getting better, then they actually make it better, which is a very interesting thing for him to say. Chris says, I look forward to hanging out with you here for sure, man. Yeah, please come through. I'm going to be getting more consistent and better with my lives, so it'll be dope to have you stop in, chop it up with us. I really, really appreciate it, man.
Things that we're doing, industrial policy that
all right, so for those of you that are still here,
those are important.
I'm going to go over my trade just one more time so it gives you something to think about. Very simple, nothing over the top. I'm going to go back to this daily chart on SPY, or I'll go to QQQ because that was what I actually traded. So I'm going to zoom in a lot so y'all can see it. All right, so we'll start off right here.
monetary policy.
This orange area on my daily chart for QQQ, at least in my mind and my opinion, was a nice support and resistance area on the daily chart for QQQ. So I kind of went back a little far on my charting, all the way back to the beginning of February or the first week of February. And you could tell in that first week of February, it got up to this area and it was an area of resistance and it came back down. Got into this area, it was still resistance and it came back down. Once it was able to break above, it went up, but then it came back down as a level of support. It went back up, it came back down as a level of support, went up, came back down as a level of support, went up, came back down as a level of support. And so, with that being said, me seeing that strong area of support and resistance, in my own opinion, I took a look at yesterday's candle before the day was ending. I saw that we were coming out of this support area with a strong bullish hammer. Let me turn them down a little bit. We had this strong bullish hammer, and then I notated, okay, so we had this support area, we got this bullish hammer, and then I noticed that we had somewhat of a gap to fill. So those three things made me extremely confident in saying that Apple, SPY, and QQQ were looking really good for calls. I got into the trade yesterday. We had a gap down, somewhat of a pullback, still in the support area, and then we blasted off. So that was the long and short of it. Using support and resistance, using a candlestick pattern as confirmation, like a signal, if you will, and then getting into my trade, especially with having this upside gap to fill. And that is what led me to get into that trade. Made a couple $100. Really proud. Big shout out to Rebel/Tokyo Sauce. Thanks for coming through. I appreciate it. I appreciate it. Chris Waters, you ever see or use the TTM squeeze indicator? Seems confusing to me. I used to use the TTM squeeze indicator. I think I have it as one of my favorites still, a long time ago. There's actually a guy on YouTube that I follow that gave me, like, that's where I got it from. And let me see if you guys can see it in my favorites for my indicators, if it's still on here. Yikes. This is a little hard for y'all to read, or at least for me to read. All right, let me see if I can move this up. Where is it? Squeeze. Here it is. The squeeze momentum indicator, I believe it's this one. Let me double check. Yeah, it's this one. The squeeze momentum indicator. I did used to use it. And I think the guy that I got it from, he's actually live on YouTube right now. So this is the squeeze momentum indicator that Chris Waters is talking about. But one thing I learned, at least from the guy that I got it from on YouTube, he said that the squeeze momentum indicator is better for the larger time frames. So we're talking a month time frame, a month chart, a yearly chart. That's at least the way that he explained it from there. And because I don't trade, like swing trade for the most part, because I don't trade on such a large time frame, I stopped using it because I trade on a 30-minute chart and the squeeze momentum indicator really wasn't working for me. So that's what I would say about that. But yeah, I used to use the squeeze momentum indicator. It is the squeeze momentum indicator, in parentheses, lazy bear. And then I'm going to go over to YouTube to show y'all who I got it from. But YouTube, who it was that I got it from, I think he goes by Options Trade Millionaire. Really good dude. I haven't been on his lives lately, but let's see if he's live. I know he likes to go live for these things. He typically goes live on Mondays, Wednesdays, and Fridays. Options Millionaire, I think that's his name. Oh, it looks like he already went live, but here's his YouTube channel. So Chris Waters, this is the guy who I got the TTM squeeze indicator, at least who I thought, you know, to use it from. His YouTube channel is Options Millionaire. So you can take a look at his YouTube channel. He talks about it every now and then. I don't know if he uses it lately, but this was the first person that kind of put the TTM squeeze indicator on the map for me. But like I said, as I learned it, it works better on the longer time frames. And so because I do scalping primarily, or if I do a swing trade, my swing trade is no more than a couple of days. It didn't really work out for me. All right, Project Limitless says thoughts on the BBP indicator. Could be a great one to scalp on 5 minute. I think you asked about that before, and I never took the time to look it up. I don't know. Let me see, which one is it? You got to let me know which one it is. If you could drop it in the chat or put it in the Discord,
Do that in practice.
that way I can take a look at it.
Advice for all.
Yo, Rebel, are you still in here? Tokyo Sauce?
It boils down to two things. One is
I know Tokyo Sauce, you had a couple questions about the back testing log, so
focus on that day-to-day and don't be dragged into.
all right, cool. So we could get into that back testing log to answer those questions if you want while Pal is talking, unless he goes crazy. You guys let me know if Pal starts saying some wild stuff. All right, so for those that don't know, I built a little standard template for back testing and journaling your trades. And so if you join Passive Income University, that you'll get sent that automatically. I actually got it set up now, so if you join Passive Income University, it'll automatically be emailed to you. So you'll automatically get the back testing log, and you'll automatically get the trading journal that I built out.
But for us, it's not the administration.
So Rebel said, I'm mostly a swing trader though. And that's perfectly fine. You can do the back testing log the same way. I'm actually starting to get more and more in swing trading. And so I built out another tab on mine. I mean, you could use the same tab, but I like to move my tabs around, one specifically for scalping, one specifically for my swing trades. And so lately I've been swing trading where I'm holding a trade anywhere from a day to a week, something like that. But I've started building out a back testing log for that as well. And I just put in the same kind of parameters, right? You use the same formulas. It'll still, as you filter down, it'll still give you a probability or percentage of how likelihood the trade is to work out for you. And so instead of the things that I had on the scalping one, like the above or below the 50%, above or below the previous day high, you can change those to things that you look at, that you look for. So if you're looking for more volume on the previous day, just change that to look for, change your title at the top of your column. Just change it to, was it more volume on the previous day candle, something like that. And then of course, if you're new, this is one of the things that me and Rebel were talking about for the way that I built out this backtesting log. Each column represents a characteristic or a parameter for your setup, right? And if that characteristic or that parameter was met, if it happened, you want to put a 1 in there, which means yes. If that parameter or that characteristic didn't happen, if it didn't work, you want to put a 0 for no. By reducing the backtesting log down to 1s and 0s, it becomes very easy for you to put in a formula that as you filter down the parameters, right? So let's say you go through, you find all the times your setup presents itself, you put in all this data, and as you filter it down in forward testing, right? So in a live trade, when you see your setup present itself, as you filter this down, your backtesting log will change. The formula will say, okay, based on what you filter down for this live trade that you're thinking about, here is the chance or the probability of the trade working out. So even if you're a swing trader or you're a scalper, all you have to do is just change these columns, change the titles for what is it specifically that you look for in your setup. What are the characteristics? What are the parameters? So if you're looking mainly, let's go back to the charts. Here's the daily chart for SPY.
I think that's a great plan for people.
So if you're looking mainly at volume, which is down here, if you're looking mainly at RSI, which is an indicator, if you're looking at MACD, if you like to use Fibonacci, those are all things that you can put in columns. And so when your setup presents itself, you can say, oh, it did have the Fibonacci, but it didn't have the right RSI that I was looking for. It did have MACD, but it didn't have the volume. When you put those in on the backtesting log and you filter it down for every trade setup that presents itself in real time, as you filter it down, this number will change in this column. It'll go up or down. And so for me, I wait and see until a particular trade has at least a 70% chance probability before I enter. If it doesn't have a 70% chance probability of it being successful, then I don't take the trade. But so I hope that kind of helps. You don't have to use these exact same parameters, Rebel, Tokyo Sauce. You can put in whatever parameters you want. The key, the backbone, the concept of this is just to keep everything 1s and 0s. That way when you put in the formulas at the end of each column, as you filter down, so let's look at it real time, right? Let's just say I'm looking at a potential trade. And what's one of the things that I have? Here, we'll start off with this. I'm gonna move it over so y'all can see it. So one of the things that I have is the actual candle pattern or the setup. So let's just say with no filter right now, there's a 76% chance that the swing trade for my setup will work. But let's just say the daily candle ends as a bearish red shooter. Now that I filtered it down, at least according to this little bit of data that I have, my backtest log says, hey, there's a 100% chance that the trade will work in my favor. So that's how it works. You add the characteristics and the parameters that you're interested in, and then in the future, when a trade presents itself, when you filter it down, the formula will change this to say, hey, here's the likelihood that your trade will work. But remember, one of the biggest things is you need more and more data. So the number one thing that I'm encouraging people to do now is on a daily basis, do at least 30 minutes to 1 hour of back testing. Every day, that's what I'm doing. At least 30 minutes to 1 hour of back testing so I can add to my back test log. All right, Chris Waters, I appreciate you, bro. Have a good day. We'll tap in another time. Rebel says, what kind of formula is that end on the back end? So it's a simple formula. Each column has this exact same one. It's equals subtotal, parentheses 1, and then obviously all the cells in that particular column. It's a very, very simple formula. And so what this formula does is it basically tells Excel, when this person starts to filter down, only count what's left in the filter. That's how it works. So it's equals subtotal, parentheses 1, comma, and then all the cells in that particular column. Yeah, for sure. Yep. Project Limitless says XOM puts swing trade idea. All right, let me go take a look at first glance at XOM, see what we're working with. Was that it? Was Powell done talking? Is he done?
Contains a wide variety of information such as books, articles, and websites.
Yo, Macho Man 6464, thanks for coming through.
You have any limitations?
All right, we want to go take a look at XOM puts. Project Limitless is talking about it.
Experiences or beliefs. I can only base my responses on the information that I've been trained on, which means that my answers may be limited in their accuracy.
Yeah, appreciate y'all for rocking with me. I know we got somewhat of a small live. We were listening to Powell. I think he's done. Can y'all confirm, is Powell done talking?
And as an AI model, I might make mistakes based on the model's predictions.
I'm guessing he is done.
The maker of ChatGPT, OpenAI, has some big backers, including Microsoft, LinkedIn co-founder Reid Hoffman.
Not yet. Oh, he's still talking?
Elon Musk also helped to co-found the company back in
Why am I getting this commercial? What is
ChatGPT,
this?
which stands for Generative Pre-trained Transformer, is just one of the
Where did he go? If he's still talking. I don't know why. Oh, it looks like it got a little crazy. Maybe he is done talking. It looks like he's done. Yeah, he's done. All right. Okay, cool. So XO inputs, if this will ever open up for your boy.
I don't know, but I found these results on search.
All right, so we want to take a look at potentially swinging some XOM puts. Let us see. Yeah, my computer would just get started up.
We've been using Rule
Yeah, I think he's done. He's done talking. All right. Let's see. So if you are a part of Passive Income University, I just want to make an announcement that I'm going to be starting my giveaways and awards again for everybody who's an official member of PIU. So please make sure you're paying attention to the Discord. I'm going to start doing the giveaways pretty soon just to say thank y'all for supporting. But we're trying to take a look at XOM for put ideas. Where the heck is the... All right. Well, it looks kind of flat, of course, for today. Let's go back to the daily chart. Let's look at a larger time frame. We did come way up here. Looks like we're about to form a bearish hand. I mean, we're not even half. We still got 11, 12. We're halfway through the day. Based on how the candle looks right now on the daily chart, I would be inclined to thinking that swinging some puts would be a good idea. It is hard to tell. Oh, okay, we do have some data back here to kind of look at. So the first thing in my mind would be to kind of shrink this down and see, are we in a support / resistance area? Basically doing the same thing I just did yesterday with Apple, QQQ, and SPY. And it kind of does look like that. It kind of looks like every time XOM kind of comes up here, it comes down. It gets back up to this level, it comes down. It gets back up to this level and it comes down. So we are back up here, and we somewhat in this moment with this bearish red hammer that's forming has an indication that we could come back down. But we're only halfway through the day. So before I kind of make the decision on swinging some puts, I really want to see how this candle ends. We still got 3 hours left for the day. So it's a little too early to tell if whether or not I would swing puts, but what I would continue to do is really try to map out. It's a little harder on the phone, but I'll try to do it with you guys. I would really try to map out this support and resistance and really get in here and analyze. I would really try to get in here and analyze and see, depending on how the candlesticks are formed, when Exxon gets into this area, what typically happens. That's what I would really try to map out. So I'm going to do this. Let's change this to orange. I do orange for my support and resistance areas. And then we want to come back in and kind of take a look. So here we're back in, oh, this is a long time ago. So we're back in February of 2023. February of 2023. We see that Exxon got in this support area and came back down. This is the daily chart for XOM. We see it came back into this support area or resistance area and came back down. Same kind of behaviors. Fast forward to September 2023, we get back up in here and we come down. We get back up in here and we come down. And then we get way, way, way down. All right, so now here we are, present day. We're back in here. So one thing I probably would be looking for, at least in my opinion, if we're talking about potentially swinging some puts, I mean, it would be nice if it was like already starting to break below this support area, because I would definitely be thinking about puts. But it's kind of hazy because, you know, it's came up here a few times already. It's come up here a few times trying to break through, going all the way back to last year. So I'm a little hesitant because it might be ready just to bust through and run up. I think a big part of like the energy stocks, oil companies, obviously has a lot to do with the economy. So we have to kind of see what's going on with gas and oil prices. And I don't know, like typically when oil prices are down, do the stocks run up? Or when the oil prices are up, do the stocks run up? Because that would be another thing that I would take into consideration is what's the forecast for like oil prices. I typically know, like at least here in California coming up, during the summertime, gas gets more expensive. And I wonder, is there a correlation during the summer with stock prices, at least ExxonMobil, will we see a run up? And it all depends on how far you're looking to swing the puts. So, but based on historical behavior, we have seen a few times that Exxon has come up here and came back down. So you wouldn't be wrong if your thought process is leaning towards puts, but you need a few other actionable signals that say, yeah, puts is the way to go. And for me, that would either be a combination of how this candle ends. Like I said, we still got 3 hours left in the day. If we could at least break below here, that would be nice too, even though that's a long way to go. So you really gotta kind of, you know, really keep an eye and really analyze this. Now, a good way to even get out of that kind of like analyzing / trying to guess is doing a backtest log. Go back and backtest this particular kind of setup, if you will, and then add as much data as you can, as many instances as you can find to your backtest log to see on a historical data side perspective, what are the chances that it'll pan out for puts. All right, Project Limitless is saying, thanks, bro. What about MCD? My puts expire this Friday, and there's some bullish momentum. I would say if you're in profit, I would take it. If you're starting to see bullish momentum and you're in profit on your puts, I would take it. All right, here's McDonald's on the daily chart. We got McDonald's on the daily chart. We are down. I've already got this charted out a little bit. We are down into a support area. It looks like we're breaking below, but it is somewhat of a bullish. It is somewhat of a bullish candlestick. It's like a bullish shooter or a bullish inverted hammer, however you want to call it. My very first thing that comes to my mind, my intuition, is that, yo, if you are in profit with your puts, trim if you can, or take some profits or do something to secure it, because we've already kind of broken below and we're in this kind of like secondary support area, and McDonald's might just shoot up, especially after kind of dropping down so heavily. That's my thoughts. That's my thoughts. But yeah, so I wanted to tap in. I'm getting better at trying to go live, get back to going live more frequently. Of course, I appreciate y'all rocking with y'all boy. I appreciate the likes. I appreciate the questions. And of course, join Passive Income University today. If you join today, you can get the first 30 days free. You get access to all the courses, all the recorded lives, all the Q&A, all the heads up for the plays that I'm looking at. And it's only $10 a month. There are people out there charging $200 a month, $50 a month, all kind of things like that. You get the first 30 days free, and it's only $10 a month. So come in, come join, come rock with us. And like always, I appreciate y'all. Salute.